Good evening and welcome to another episode of the Blue Ribbon Podcast. I'm your host, Chris, and we're going to talk about IFTA taxes. Now, I got to go ahead and be honest with you. This is going to be a shorter than normal episode because I'm pre-recording it because I want to make sure I get all this information in here with all the visuals that we need. And I thought, oh man, this is going to be a long episode. And no, that's not true because I just got done with the end of it, and it's 18 minutes long. Now, it took me 2 hours to record, so I guess I'll get some credit, that I sat here in the chair for 2 hours like I normally do for a podcast. But when it's all said and done, it's 18 minutes. But it's packed full of information, and it kind of shows you that what we're going to talk about tonight is pretty simple. So y'all enjoy. Now, this is a subject that generally starts more fights than Budweiser, but we're going to try to get through it. We'll start with a little bit of history. Then we'll talk about how we got here. And then I'm going to show you some IFTA settlements that shows you with proof of how IFTA taxes are calculated. Once we understand how and why they're calculated, then we'll be able to apply that knowledge to how we should be buying fuel based on what we've learned about IFTA, because IFTA is a part of your fuel purchasing strategy. But we're going to get our friend the calculator out, and we're going to use the information that we learn about IFTA to decide how to buy the cheapest fuel. IFTA, IFTA, is the International Fuel Tax Agreement that is administered by the International Fuel Tax Association. IFTA was created in 1983 by the states of Arizona, Iowa, and Washington. And what they were trying to accomplish was make it simpler to pay your fuel taxes. Before IFTA, if a truck was going to run interstate, they had to have a fuel permit for each state that they ran in. The only way to pay the taxes that they owed for the number of gallons that they consumed was to calculate that and then purchase that fuel inside that state while they were running the load. IFTA started by 3 states in 1983. There was another group called the RFTA, Regional Fuel Tax Agreement, which was Maine, New Hampshire, and Vermont. In 1984, they started working on the federal level to try to put this together for everyone. Between 1987 and 1990, a new model for IFTA was adopted by member states. The original 3 states grew to 6, then from 6 to 16. In 1991, IFTA incorporated as a nonprofit in Arizona to serve as the administrative body for the agreement. And then in September of 1996, Congress enacted the legislation. After September 30th, 1996, a state that is not participating in the International Registration Plan may not establish, maintain, or enforce a commercial motor vehicle registration law, regulation, or agreement that limits the operation in that state of a commercial motor vehicle that is not registered under the laws of the state if the state is registered under the laws of a state participating in the plan. What that basically means is they consolidated the collection and the payment of fuel taxes into one body, which is the International Fuel Tax Association. Whenever you buy fuel at the pump, you're paying in to IFTA at whatever that state's fuel tax rate is. Of course, they're all different. Then your return is calculated, and they determine how many miles you ran in that state versus how many gallons you purchased, which gives you a miles per gallon. They'll use that miles per gallon to calculate how much fuel you burned in that state, and then we'll take those number of gallons multiplied by that state's tax rate, and that will determine what you owe that particular state. There's one state that does not participate, and that's Oregon. Any gallons of fuel that you buy in Oregon do not go into IFTA. It's 0 there. But they charge a 25.12 cent mileage tax for every mile that you drive in Oregon. Oregon does not get its tax money from IFTA, it gets it from a mileage tax. There are 2 states that don't give full credit, and that's Kentucky and Virginia. In Kentucky, the state fuel tax is 32.5 cents, but they only credit 22 cents. And in Virginia, the tax is 47 cents, but they only credit 32.7 cents. In addition to IFTA taxes that all trucks have to pay if they're hauling freight in the United States, There are 5 states, including Oregon, that charge a mileage tax. Those states are Kentucky, New Mexico, New York, Connecticut, and of course, Oregon. Kentucky's is 2.8 cents a mile. New Mexico's is 4.38 cents a mile. New York is 4.62 cents per mile. Connecticut is 10 cents a mile. And Oregon, again, is 25.12 cents. There are 2 states that charge what's called an ad valorem tax, and that means added value. I'll just pause and let you laugh at that. Anyway, those are Arkansas and Tennessee, and they are 1.09 cents a mile in Arkansas and 0.0077 cents per mile in Tennessee. Now let's talk about how the taxes are calculated. So what you see here is an IFTA fuel tax statement for one of the trucks in our fleet. I'm going to show you 2 of them because this one got a credit and the other one got a debit. So the first thing we're going to look at is how many total miles that the truck ran in this month, and that was 6,738. Now we need to go over and look at how many gallons of fuel were purchased. In our example, that was 877.3 gallons of fuel that were purchased. Now we're showing a 7.680 miles per gallon. They got that by dividing the 6,738 miles by the 877.3 gallons. That determined the fuel mileage for this calculation. So you can see in Arkansas, we ran 1,072 miles, 7.68 miles per gallon. That means we used 139.5 gallons of fuel. Their rate is 28.5 cents. So we owe them $39.76. The amount of fuel that we bought in Arkansas was 95 gallons, and the credit rate was the same as the tax rate of 28.5 cents. So that means we received a fuel credit for those 95 gallons of $27.13. So for the month of September, we owe Arkansas $12.63. Now, if we come down to the third line, which is Illinois, we ran 1,355 miles at 7.68 mile per gallon. We used 176.4. Their tax rate is 74.9. So we owe them $132.12. We bought 253 gallons at a credit rate of 74.9, which means we got a credit of $189.50. So we paid in $189.50, but we only owed $132.12. So we got a credit of $57.38. So that means when all of these states that we ran in were calculated, it came to a credit, meaning we paid $375.16 in, but we only owed $361.47. So we got a $13.69 credit on our settlement. Now, if we look at this other truck, it ran a lot more miles in a lot more states. He ran 13,360 miles at 6.634 miles per gallon. He bought 2,013 gallons. When we calculate all the different states, we owed $934.14. We only got credit for $844.52, which means that truck owes $89.62 for this month of fuel. So one truck got a credit and one truck owed. One truck ran a lot more miles than the other one did. One was pulling platform and one was pulling a van. But it comes down to this: the number of miles that you run divided by the number of gallons you purchased determines the fuel mileage. For the purposes of calculating the return, that's it. That's the fuel mileage. And for every single state that is going to be included on that report, it's going to be, in this case, 6.634 miles per gallon. And they're going to take the miles that you drove in that state, which in our case is calculated or tracked by the motive ELD in the truck. Landstar takes that information and says, okay, well, he drove this many miles and he bought this much fuel. It's 6.63. They put that in, says you drove this many miles, you owe this much tax, you paid that in, you get a credit or you don't. So what does this have to do with buying fuel? What it means at its most fundamental level is that the IFTA tax when you purchase the fuel doesn't matter. If you drive in a state, you owe them tax money for the number of gallons you burned while you were in that state. It is not a mileage tax. It is a consumption tax, and it's based on the number of gallons you burned, which is determined by the fuel mileage that's calculated off of how many miles you drove and how many gallons you purchased. So we don't need to include the IFTA number when we're trying to figure out where to purchase fuel. We want to purchase fuel where it is the cheapest. And in order to get that calculation, we have to remove the IFTA tax completely from the equation. Now, Landstar has a really nice tool that they developed a couple of years ago that makes this super, super simple, and it's called the Landstar One app. Now, if you don't have the Landstar One app, you can do the same thing because there's a list on the internet of all of the states and what their taxes are. So if you're going to buy fuel in a state, and you can see what your discounted price is in Pennsylvania versus Ohio, look at your discounted price and then subtract the IFTA. That will then tell you what the actual cost of the fuel is. We're going to show a couple of examples here from the Landstar One app. This one is from right here, close to my house, the TA in Hurricane, West Virginia. We can see that the pump price is $3.799. The Landstar discount is 75 cents. And the state IFTA tax credit is 35. Now, if you're running at Landstar using this app, you need to have both of these boxes checked so that you can get to the net fuel price. That's all we're interested in. We just want to buy the cheapest fuel. In this case, the cost of the fuel is $2.68 a gallon. That's what I'm after. I don't care what the tax is, because if I drive in West Virginia, I'm going to owe them tax. And I'm either going to have paid too much in throughout the period, or I'm not going to pay enough, and I'm either going to owe them or I'm not going to owe them. But it has no bearing whatsoever on the cost of the actual fuel. One of our favorite examples to use of this is the TA on I-90 in Erie, Pennsylvania versus the TA on I-90 in Kingsville, Ohio. They're separated by just a few miles, and one's right across the state line. And this goes back and forth. Sometimes the TA in Pennsylvania is cheaper. Sometimes the TA in Ohio is cheaper. We can see here that today, just minutes before I started recording, they were 1 penny apart. So if we look at the Kingsville location, the pump price is $4.09. The Landstar discount is $1.03. The state IFTA credit is 47 cents. And the net fuel price is $2.59. When we look at the Pennsylvania price, the pump price is 30 cents higher. The Landstar discount is $1.05. The state IFTA credit is 74 cents. And the net fuel price is $2.60. At that point, it's a penny difference. It doesn't matter. If you buy the fuel in Pennsylvania, sure, you're paying more in to IFTA, but if you drive all of your miles in other states that are lower, that just means you're going to get the money that you paid in back. But it doesn't change the cost of the fuel. The cost of the fuel is the cost of the fuel. And that's what we need to be focused on as truck operators. Don't get distracted by goofy strategies of, I'm only going to buy it in the high tax states. No, I'm only going to buy it in the low tax states. You're completely ignoring the cost of the fuel. And there's been plenty of times, today's not a good example, but there's been plenty of times that I have seen that TA in Erie be 25 cents a gallon cheaper than the TA in Kingsville, Ohio, just a few miles away. So that's why, especially if you're Landstar and you have access to the Landstar One app, you need to be checking the fuel prices every single day because they change at midnight. Why are we going to give TA Petro Loves Pilot Flying J more of our money that they don't deserve? They get enough as it is. Let's stop giving them more than what is necessary for us to run our businesses. We don't need to overcomplicate this and make it more than what it is. This is an example, really, of the market coming through in the 80s where people got together and said, hey, this having 6 different license plates on my truck and having to stop every time I'm in a state to buy fuel to pay this tax, it was a nightmare. It was one part of the good old days that we don't want to get back to. All they did was make this just like withholdings from a paycheck, right? And of course, you don't get that back. But you pay in and a return is calculated and you either paid too much or didn't pay enough. This is This is something that's very simple. And the tools that we have available to us now, there's even a website called Find Fuel Stops that you can go to if you're not at Landstar, if you're a carrier with your own numbers. There's plenty of services out there that can give you this information, but it could be thousands of dollars a year in unnecessary fuel costs that you're paying out because you're not paying attention to what the actual cost of the fuel is. Don't try to put some blanket strategy on this of, oh, I'm only going to buy in the high states, or I'm only going to buy in the low states, or I just don't care, or it doesn't matter, because it does matter. The purchasing of fuel alone, aside from setting your truck up to get better fuel mileage, but just through purchasing fuel in a more efficient way, you could save yourself a couple $1,000s a year. I mean, sounds like a good vacation to me. Let's stop giving truck stop operators more money just because we want to be lazy and not take a few seconds to do a calculation. Now, again, this has never been easier for those of us at Landstar because we literally open our phone and it's green is good. And I mean, you just go, okay, well, I'm going to buy it there because that's where it's at cheapest today. Another fuel purchasing strategy that you need to be considering that doesn't have anything to have to do with IFTA is stop trying to manipulate your fuel purchases based on what your settlement's going to be. I used to do that crap when I was at Anderson back in the day. I didn't want to get fuel near the end of the week because, of course, when you've got these truck leases, your costs are so incredibly high. You're just trying everything you can to get cash flow coming. You need to buy fuel where it's on sale. Let's get the fuel at Sam's Club instead of the 7-Eleven on the corner because it's more convenient. Let's buy it when it's cheap and then hold the inventory. Yeah, it can upset your cash flow a little bit, but what are the results going to be of that 30, 60, 90, 180 days from now if you put in a good fuel purchasing strategy that can save you money over the long run? And this is another example of why we tell you that people who have not ever operated a business before should not go get their own authority, should not take on all that additional risk. You should go lease to a carrier that has a good safety department, that has a good billing and compliance department, that has fuel discounts and things set up for you, that has that infrastructure laid out there for you, especially when your business is new, because you're going to come into a lot of this stuff. And y'all, I promise you, 80% of the people leased to Landstar right now have no idea that they can have those fuel reports that I showed you emailed to them. You just have to call the fuel and miles department and say, hey, I'd like you to send me my IFTA every month, and they'll send it to you in an email. Why that's not standard, I'll never understand. But that's the information that shows you the results of your decision making. We've got to take being in business very seriously, because if we don't, we're going to be seriously out of business.